Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS. That's Behind the Scenes, where we share a sneak peek of the latest edition of the Business Today magazine with all our viewers. Joining in on the show with me are Anand Adhikari, Managing Editor of Business Today magazine. We also have Surabhi, who is the Economy Editor, and Senior Assistant Editor Binu Paul also joins right in. Welcome to all of you and thanks a lot for taking the time out. And now to showcase the glimpse of this edition is this one, which I have the copy in my hands, and now you can actually see on the feature or on the cover story you have Kunal Behel and also Rohit Bansal, who are the co-founders of Snapdeal, and this cover story is to really find out the newest strategy that Snapdeal has come up with to fight competition in this space, and the big question as to whether they will be successful at that or not. So Binu, let me kickstart this discussion with you because you've written the cover story. First of all, you're talking about value commerce that is going to be Snapdeal's next pivot or next strategy to beat competition. What exactly do we mean by value commerce? And with this, do you think it is safe to say that Snapdeal has scripted a comeback? And if yes, then how have they done so?
Yes, so Sakshi, if you look at Snapdeal after the merger collapse with Flipkart in 2017, so they've launched on the Valley Commerce play. So, and it's been about 6 years now, and we can say they've sort of, scripted a comeback. So, if you look at it, so what they've initially done is they've removed all money draining, hard to sell, heavily commoditized categories such as smartphones and large appliances, which was back in 2017 about 60% of their revenue. Now they've all come down. Now, if you now value fashion itself alone is over 50% of their revenue. So it also removed shipping fees for customers so that the pricing can be standard, and it also reduces the price point. So overall, 90% of the products today on the platform are priced under rupees 1,000 rupees, and 75% of its revenue comes from smaller cities, tier two cities, and beyond. And they've also implemented a lot of standards and processes in quality checks, so that people coming for value commerce product or value products also get some sort of a reassurance, like we shop for non brands. In addition to that, a lot of other initiatives have been taken for visual design, AI and ML capabilities, and vernacular languages have been implemented for better search. The marketing spends have come down significantly. It is only the influencer-led digital campaigns are the only marketing spends that they do. So, in all, if you look at it, they have brought their marketplace expenses significantly down. The monthly burn rates have come down to about 1 crore or less than 1 crore from about, let's say, 40 to 45 crores in 2021. And their they've also, meanwhile, launched a new segment for private labels. They have about a dozen private labels today, and that segment is profitable today. Their SaaS vertical, Unicommerce, is profitable today. The marketplace is where we are talking about the Snapdeal marketplace, which is hovering around the profitability mark. So by the end of this financial year, they could be crossing the profitability mark or break-even point, or could be nearby. So we can say they've sort of done what was unthinkable, let's say, 6 years back, of turning
Sure.
around.
Sure. But with the competition heating up even more, what's the road ahead for Snapdeal? Will this strategy really help Snapdeal compete with giants like Flipkart and Amazon and the recent challenger that's Meesho?
Yes. That's the question. So now they've created a place for themselves. They've carved a niche for themselves in the value commerce segment. But unlike what a few years back, when they launched and when they built it, now there are very strong players in the value commerce segment. For example, Misho, they said they've been profitable for a quarter. They haven't really announced their latest results, so we don't know the subsequent quarters whether they've been profitable or not. but they're very aggressive player. They have their IPO plans chalked out already, and they have a very strong investor that is SoftBank behind them, which is also an investor in Snapdeal. So for them, the prospects of raising further funds are very likely if they were to go for an IPO, let's say in 1 year or 2 years down the line. And besides that, Flipkart has its own value
Sure.
commerce focus with Shopsy, which is actually doing very well. So
Mm-hmm.
it is not going to be easy for Snapdeal. The competition is really heating up. Snapdeal is looking only for a very focused growth, not a very aggressive growth. So they will have to be very careful about not to cede their market position once again to Amazon and Flipkart. So they will have
Right.
to raise funds or do an IPO. But in any which case, it is going to be a very tough market. It's going to be very competitive, and we have to wait and see how Snapdeal kind of battles others in the next phase of the growth.
Absolutely, be interesting to watch all the developments that follow soon. Let's now go across to Surabhi, and she's really written a very, very interesting story around elections and freebies that come along with it with the political parties. We've just seen the state elections conclude. We are heading over to the general elections in the new calendar year as well. So, Surabhi, tell us, you've clearly looked at the trend of freebies. First up, if you could help all our viewers really understand what is a freebie and why is it considered to be frivolous spending by political parties during elections?
Thank you, Sakshi. So, yes, this is a very interesting story, especially because, when we look at state finances, a lot of states have not been doing really well in terms of the kind of revenue they've been earning and, so you need to also monitor your expenses when you finalize your budget and your plan for the year. So, in this context, a lot of political parties, they've gone ahead and announced all kinds of freebies and schemes for voters, provided that they vote them into power. So, we've seen things like, free transport for women and scholarships, promises of farm loan waivers, moving back to the old pension scheme. All kinds of things are being talked about in the recently concluded state elections. But when I spoke to economists, they said that, interestingly, they said that a lot of these things, they've not really, there's no standard definition of a freebie, but generally what they said was that something which only gives you like an instant benefit, say like a free mobile phone or, a farm loan waiver, that seems to be just a freebie, while some like, say, free education or subsidized healthcare, insurance, or even free transport for women, all these can have like a long term or a medium term impact on development of people and the society at large. And so it shouldn't really be seen as a freebie. So there's a very fine demarcation between the two. But
Absolutely.
overall, yeah. But overall, one has to be careful while promising these kinds of things. And, parties need to understand the fiscal position of their states before they go ahead making such promises.
Right. So these freebies aren't really free completely, is something that all the viewers must understand. But is there an estimate, Surabhi, of how much is really spent on fulfilling these election promises?
So per se, there's no definitive study which gives you an idea about, what kind of amount is spent on fulfilling these promises. But we must understand, as you also pointed out, that at the end of the day, it's the taxpayer or the voter who eventually has to pay this out of their pocket. Maybe not immediately, but, after a gap of 2, 3 years in the form of higher taxes or something. But when the Karnataka State Assembly elections took place, a report by SBI EcoRap, it had said that, the five poll guarantees which the Karnataka government had promised would cost about 60,000 crore annually and about 35 to 40,000 crore in the current fiscal. Similarly, other reports, such as one by PRS Legislative, had shown that states spend about 9% of their total budget on subsidies, while a large part of it is on electricity, but other freebies or, development promises also contribute to a significant part of it.
Right. Okay. That's as far as the elections and the freebies around elections that we can continue to watch out for. Let me now go across to Anand now, who's written a very, very important story around financial inclusion. Anand, we've seen that in the last decade, numerous initiatives have actually been undertaken by the government as well as the RBI to promote fiscal or financial inclusion, including implementation of Jan accounts, the Mudra loan scheme, the introduction of the new banking licenses as payment banks, small finance banks, which are targeted at serving the economically disadvantaged. Could you help us understand what have these steps really led to? Have they really filled the gaps already? And could you also elaborate the motivation behind pursuing this story?
Thank you, Sakshi. The trigger for doing this story, like you mentioned, Jandan account, Mudra loan, and the differentiated, banking license. So let's look at each of these three, individually. In 2013-14, 40 crore bank accounts were opened, in the semi-urban and rural areas. And I was looking at some data of the outstanding deposit in these accounts. Today the outstanding deposit in these accounts is around 2 lakh crore. And if you look at the total deposits in the system is around, 200 lakh crore. So it's just, 1% of the total, deposits. So there is a long, room to grow here on the Jantan side, and that requires, credit and other employment opportunities and other thing. Second, coming to the Mudra, the Mudra loan, if you see, the government encouraged banks, to give, 50,000 to 10 lakh, loan to individual or the entrepreneurs, for business purposes. And in the last 7-8 years, some 30 lakhs crore loans have been given. And I was looking at the NPA data. In fact, I did a RTI on SBI. In the last 5 years, the gross NPAs are 16% plus. So there are huge NPAs in the Mudra loan scheme. So there is a need to again relook at the scheme, because government keeps talking about lower NPAs, but they look at the denominator as an amount sanctioned. It should be the outstanding loan, the gross NPA and the outstanding loan. And when we did a RTI on our SBI, we got the figure 16% plus NPAs in the last 5 years. And the third is the small finance bank or the differentiated banking licenses which came under when the Raghuram Rajan was the RBI governor. And the idea was to achieve financial inclusion through these new models. When payment banks came in, that model right from the start, it failed in the sense that out of 11, only 5 or 6 banks started with payment banks, and even now these payment banks wants to convert into a small finance bank. On the small finance bank side, 10 out of 11 player came from the MFI. They were doing micro, unsecured micro loans, and they converted into a small finance bank because there was a advantage of taking a low cost deposit and then lend. But if you look at the figures today, the entire lending to micro segment by these, SFBs is 58,000 crore. And if I look at the NBFC MFI, they have done some 1.38 lakh crore. It's not even half. And the reason being now these small finance banks, are doing more secured. So they are moving from unsecured to secured. In a way, they are vacating the space. If you look at the deposit size, they are more urban. I mean, they are setting shops in Mumbai, Delhi, and catering to those urban customer. So in that sense, if you look at their objective is lost, of achieving financial inclusion. And the final is the the traditional model of self-help group. Where the banks, they encourage individuals in small geographies, to create a group of 8-10 people. They collect deposit and they also lend. And the figures there also, I was looking at, some 60,000 crore of deposit and lending of some, 1.80 lakh. It's just 3 times, where it can easily go to 5 or 6 times. I mean, that is allowable, So there's a lot to be done on the financial inclusion side. If I look at the institutional framework, the small finance bank and the payment bank, or the models like, self-help group, or the BC, banking correspondent model.
Absolutely. Now, Anand, if you could also expound upon what kind of policy recommendations are now proposed by the industry or market participants to improve financial inclusion and financial well-being of the poor going forward.
So, like we talked about Jan Dhan, 40 crore accounts, with the banks, open in this smaller, geography. The last mile connect is the banking correspondent, and when I spoke to, players there, they told me that in the last 10 years there has been no revision in the prices or the charges. Imagine the inflation and other thing. There has been no revision. So they have been asking, that the RBI or the government should revise the charges of the prices, And second, anomaly which they told me about, one BC, they can be BC for multiple banks, but it's very specific to the, the project or the product. If suppose, one bank says you open accounts for me, he can't sell third party product or insurance or a, mutual fund. Where if you look from the customer side, he needs a one single point to, do multiple things, So BCs are saying that we should be allowed, to sell multiple, product of multiple banks rather than focusing only on one particular objective is the banks, gives them. Second, I was looking at even the self-help group model, and when I spoke to NABARD and other players, they told me that they should graduate, from let's say, pickle making to maybe micro enterprises. That way they can create employment and also in a way compete with the bigger player there regionally. So that is not happening today. And finally,
Absolutely.
if you look at the NBFC MFI, the entire this 1.38 lakh crore of microfinance portfolio is unsecured. So they need some sort of a guarantee from the government. The very fact that the small finance bank today are doing more secured, because if you have an entire unsecured portfolio, then it's very risky. So there's a demand from the NBFC MFI players that there should be some guarantee from the government so that they can scale up the lending, the micro lending.
Absolutely. Very, very insightful right there. So a lot of investors and viewers will be very interested as to how will this really go forward from here on. But in the end, Anand, if I can ask you to also wrap up this entire edition, highlight any more important stories that our viewers could be looking at too.
So apart from these three stories, Sakshi, another story on connected lending. RBI 2 weeks back came out with a proposal saying that they are relooking the entire connected lending framework. In the past, if you see, let's say in the last 4 or 5 years, we have seen instances of especially in the cooperative banks where the lending is happening to people who are connected with directors and all. And why this is important today, Sakshi, is because if you look at the NBFC space today, you have all the big corporate player there. The very fact that corporates are not allowed today in the banking space is because of the connected lending and the other issues which comes in, once you allow corporate there. So RBI is now re-looking at the entire connected lending, framework. We also have, fintech, where, banks are lending to fintech, and then fintech, in a way, banks are giving money to fintech, and then in turn, fintechs are lending, to SME and the final customer. There also, the instances can happen where money is moving to people who are at some position in the bank, So I think this is a very important story which I want readers to read, because it's in a way connected with the entire financial services, governance, framework.
Absolutely. And you know what, the one that I will be watching out for is the fat fad for sure. It's a very, very interesting story, and a lot of viewers would be interested in it as to see how the market for anti-obesity drugs in India is growing rapidly, how major pharmaceutical companies are now jumping on the bandwagon to create anti-obesity drugs as well. Will be a very, very interesting watch and a read for a lot of our viewers right there. So many stories out there for you. Of course, 3 of them explained pretty extensively by all my colleagues right here on the panel. Many thanks to you, Anand, Surabhi and Binu, for being with us on this special edition and helping us with some of the insights from your respective stories. And with that, we will wrap up this special edition, but do stay tuned on to Business Today Television as a lot of news and updates continue from the world of business and stock markets on your screens.